Did you know that in 2019 alone, the IRS reported over 3 million taxpayers that entered into installment agreements? But what exactly is an installment agreement with the IRS? Today, we will be looking at IRS's installment agreements, breaking down everything from the basics to how you can potentially have your tax debt forgiven. So if you're struggling with tax debt or just curious about your options, you're in the right place. And don't forget, if you find yourself overwhelmed or in need of personalized advice, consider reaching out for a professional consultation to explore your best tax relief options. Let's get started. What are installment agreements? An installment agreement with the IRS is essentially a payment plan. It's a way for people who owe taxes but can't pay the full amount all at once to gradually pay off their debt over time. Think of it like a monthly subscription or a phone payment plan, but instead of getting services or goods, you're paying off what you owe to the government. Here's how it stands out amongst other tax relief options. You can make flexible payments. Installment agreements let you break down your large tax debt into smaller, more manageable monthly payments. This can ease the financial burden, especially if you're juggling other important expenses. Secondly, you can avoid harsh penalties. By setting up an installment agreement, you can avoid severe penalties and actions from the IRS, like garnishing your wages or seizing your assets. It's a way to stay on good terms with the IRS while handling your debts. An installment agreement is accessible to many, if not all. Most people who owe taxes can qualify for some form of installment agreement. Whether you owe a little or a lot, there's likely an option that fits your situation. It's definitely a powerful tool for relief. Though it might not seem as immediately impactful as some other tax relief measures, don't underestimate the power of an installment agreement. It gives you a clear path to settling your debts without the added stress of coming up with a large sum of money all at once. Moving on, how to be eligible for an installment agreement. Getting an installment agreement with the IRS might seem complicated, but it's actually a straightforward process if you follow these steps. Here's how to do it in simple terms. Number 1, check your eligibility. Before anything else, make sure you've filed all your required tax returns. You need to be up to date on filing to be considered for an agreement. Number 2, you need to determine how much you owe. Know your total debt amount. This includes taxes, penalties, and interest. If it's $50,000 or less, you can easily apply for an installment agreement online. The next thing you need to do is to decide on your payment plan. You can choose from either a short-term plan or a long-term one. What is a short-term payment plan? If you can pay your debt in 120 days or less, you might not need a formal installment agreement. And what does a long-term payment plan include? For debts you can't clear within 120 days, you'll need a long-term payment plan, which is the official installment agreement. Here are some of the steps that you need to follow before you apply or choose any of the options. Number 1, gather your information. Have your tax information, social security number, or employer identification number, address, and an estimate of your total tax owed handy. Number 2, apply online. Go to the IRS website and use the online payment agreement tool if you owe $50,000 or less. You'll need to create an account or log in if you already have one. Number 3, by mail or phone. If you owe more than $50,000 or prefer not to use the online method, you can apply with Form 9465, known as Installment Agreement Request. You may also need to fill out Form 433F, known as Collection Information Statement. Number 4, stay compliant. Make sure to pay at least your minimum monthly payment on time each month. Keep up with all future tax obligations. This means paying all new taxes when they're due. And lastly, receive a confirmation mail from the IRS. The IRS will mail you a confirmation once your installment agreement is approved. This document will detail your payment plan. What are the types of installment agreements? When you owe money to the IRS, figuring out how to pay back that debt can feel overwhelming. Luckily, the IRS offers installment agreements as a way to pay off your taxes over time. Here's a simple breakdown of the different types of installment agreements and who is eligible for them. What are full payment installment agreements? It's when you agree to pay off your entire tax debt in monthly payments over time, typically up to 6 years or 72 months. Why is applying for a full payment installment agreement helpful? It allows you to spread out the financial burden of your tax debt without facing immediate full payment. However, it is important to know that penalties and interest continue to accrue until the debt is paid in full. From full payment installment agreements to partial payment installment agreements. What are partial payment installment agreements? Under this plan, it allows you to make monthly payments that may not cover your total tax debt before the collection statute expires, potentially forgiving the remaining balance. Why is it helpful to apply for such a plan? If you can't afford full payments, this agreement can lead to paying less than the total amount owed. What is its eligibility factor? Based on a financial analysis showing you cannot fully pay your debt before the statute of limitations on collection ends. Thirdly, you have something known as the streamlined installment agreements. For debts under $50,000, this agreement fast-tracks the approval process for setting up a payment plan. There is less paperwork involved, and there is no need to disclose extensive financial information, which makes it easier to apply. What is the eligibility for a streamlined installment agreement plan? You owe less than $50,000 in taxes, penalties, and interest combined, and you can pay the total amount within 72 months. The fourth option is guaranteed installment agreements. Under this, the IRS guarantees acceptance of your installment agreement if you owe $10,000 or less, provides a straightforward path to resolving small tax debts. You must not have had an installment agreement in the past 5 years. You agree to pay the full amount within 3 years, and you filed all required tax returns. Okay, so how to navigate through the IRS policies and ensure compliance throughout. Dealing with IRS policies can be tricky, especially when you're trying to manage your tax debt through an installment agreement. Here's a simple guide to help you understand how installment agreements interact with IRS collection activities and what additional costs you might face. The minute you set up any of the payment plans, you pause all collection activities by the IRS. When you set up an installment agreement, the IRS generally stops its collection efforts. This means no more calls or letters demanding immediate payment. But there's a catch. Even though collection activities stop, the IRS can still file a tax lien against you. A tax lien is a public notice that the IRS has a claim on your property, including future assets you might acquire, until your tax debt is paid off. A common question that I get is, what about any penalties and interest at the time or after setting up a payment plan? There will be continuing charges on the outstanding amount. Even with an installment agreement, your tax debt will continue to grow through penalties and interest until you've paid it off. It's like having a credit card balance. The longer you take to pay, the more you owe. Is there any user fee at the time of setting up of a payment plan? There's a fee for setting up an installment agreement with the IRS. The amount can vary based on the type of plan you choose and how you set it up, online versus paper. However, there is good news for some people. If you're considered low income, the IRS might reduce or waive the setup fee. Plus, if you agree to automatic payments, direct debit, your fees may be lower. In order to be considered low income, you have to go through a certain amount of paperwork and fill up forms to prove that the IRS that you just can't afford to pay the taxes. There is one more last option on how you decide to settle your debt with the IRS, and that is known as the partial payment installment agreements. Partial payment installment agreements, PPIA, are a lifeline for those who find themselves unable to pay off their entire tax debt within the IRS's collection timeframe. Here's how they work and what you need to know to qualify. PPIAs allow you to make monthly payments to the IRS that are less than the total amount you owe. Once the collection period ends, any remaining tax debt is forgiven. Why is it helpful to set up such an agreement? If you can't afford to pay your full tax debt, this agreement offers a way to reduce your burden without facing harsh penalties. How does the IRS determine eligibility and qualifications for a partial payment installment agreement? To qualify, you must undergo a financial analysis. This means providing detailed information about your income, expenses, assets, and debts. The IRS uses this analysis to determine if you genuinely cannot pay the full amount before the collection statute expires. You'll need to prove that your monthly expenses are reasonable and necessary, leaving you unable to cover the full tax debt. You'll need to complete and submit IRS Form 433-F, also known as the Collection Information Statement. This form captures all the financial details required for the IRS to make a decision. And be sure to consult a tax professional. They can help ensure your application reflects your financial reality accurately and increases your chances of approval. Navigating the complexities of IRS installment agreements can be daunting, but armed with the right information, you're now better prepared to tackle your tax debt in a way that's manageable for you. Whether it's understanding the types of agreements available, the process for applying, or the financial implications, taking control of your tax situation is an important step towards financial freedom. If you're feeling overwhelmed or unsure about the best path forward, remember, help is available. Seeking professional advice can provide personalized guidance tailored to your unique situation. Don't forget to hit that like button and subscribe to our channel for more insights. Thanks for watching, and don't forget to subscribe for more helpful insights and tips on managing your finances.